Hi friends, hope you're all doing good today. Today I have a very good strategy that I came across, and I have tested this myself, and it looks pretty promising. So let me walk you through the steps of the strategy. Let's start by adding the indicators. Before that, I'll be showing to you guys the strategy on a Euro USD Forex pair chart and on a 1 hour time frame. So let's go ahead and add the indicators. The first indicator we need is Guppy EMAs. If you type in Guppy, you're going to find this Guppy multiple moving average written by someone named Optic Tropic. You can add that to your chart. And then the second indicator you need is Ichimoku Oscillator. You see this Ichimoku Oscillator written by Lonesome. You can add that to the chart. So these are the only two indicators that we need. So in the Guppy indicator, you can actually get rid of this arrows and alerts. Click OK. And this is all you need. So basically, let me explain you how this Guppy indicator works. So these are all set of EMAs. They are split into two groups. So we can call them something like the red group are like long-term investors group, and then the blue lines, the blue EMAs are retail traders group. So these are short-term traders and these are long-term investors. So in order for us to make an entry, both investors and the retailers agree to the same price movement. So either they both agree to go down, price to go down, or they both agree for the price to go bullish up. So, and then the other indicator is Ichimoku oscillator. So we're going to confirm our entries uh, based on the Ichimoku oscillator color. Red is bearish, green is bullish. So in order for us to make an entry, we got to make sure the investors, the red group and the blue group, the retail traders, they both agree. So in order to clarify ourselves if they agree or not, we should always make sure there's a gap between this red group and blue group. See, if you see a gap here, a gap is formed here, and then you see this Ichimoku oscillator is red, you can make an entry. The price goes down, right? And same here, both agree. You see a gap between the investors and the retailers, and the retailers are below the investors. So basically, to make the conversation easy for ourselves, I'll just going to say the red group and the blue group. So the blue group is below the red group, and you see a gap. At the same time, you see Ichimoku oscillator is red. You can make an entry here. The price goes down, and never make an entry when this red group is not clear. Like you see here here as a single line, right? So don't take the ignore this area. So you see here, like there's a single line here, right? And then here the red group is splitting, right? Can make an entry if Ichimoku oscillator is also red. The price went down, right? And then here they are both merged into each other, so we'll not make an entry. And here you see the red group, they are getting separated, and at the same time the blue group is above red, and then Ichimoku oscillator is green. You can make an entry here, and then here it's sideways market. When they are grouped or merged together, the lines are into each other. That's a sideways market. And then you come here, and there's a gap between the two, and even the red group, you see the lines clearly separated out from each other. So they both agree. And then we'll make an entry either on this candle or this candle. Make sure the Ichimoku oscillator is green. The price went all the way up. So like if you come here, you see that red is like a single line. You're not going to do anything here. And here you see the red group is like clearly the red lines are separated out from each other. Like if you little bit expand, you can see them clearly, right? Yeah. So now both retailers, the blue group, and the investor group, long-term group, they agreed to the same price. So the price went all the way up, and Ichimoku oscillator also was green, right? And then you can also make a re-entry here as the red group is already clearly, the lines are clearly separated out from each other, and then the blue group is also separating out. So you can make an entry here again. So this is the strategy, guys. You can set this in your own charts and do some testing yourselves back to back. I'm pretty sure a lot of things will be clear when not to enter. Never enter a trade when these groups are merged into each other. So this Guppy EMAs helps helps with trading a lot, because it's going to tell you if both long-term and short-term traders agreed, they agreed to the same decision, either to go bullish or bearish. If they don't agree to each other, like you see, like single line here, right? Like they're merged into each other. It's not clear. Red is like single line. So this is a sideways market. So when they separate out from each other, then that's only when the market is trending. Always keep an eye on the investor group, red group. Make sure these lines don't touch each other. They are separated out. If they are into each other, there is a disagreement. Never enter a trade. Only enter a trade when the red group, all the lines in the red group are separated from each other, and then there's a gap between retailers group, the blue group, and the red group. There's a gap between them. At the same time, Ichimoku oscillator will confirm the color. Like if it's green, it's going to be bullish. So I guess it's pretty clear. I hope once you set this on your charts and do some back testing, things will be even better for you. Yeah, this is like sideways market, downtrend, uptrend. Yep, that's all, guys. Hope this strategy helps with your trading journey. Happy trading. God bless.